Welcome, Governor. Thank you very much for your partnership in this event. And once again, here we find ourselves a year on stage to talk about these exciting developments and markets. First of all, what I'm going to try to do with you, and also a little bit on our opening panel, is to try and decide really what it is we're talking about and what are we trying to achieve. So, I mean, clearly, as the Governor has just said, there are terrific benefits to be had from unbundling financial services, digital financial services aid convenience, aid access, but the end goal, presumably, is accelerating prosperity. Now, here, for example, you have the savings product Mshawi with 20 million accounts with an average balance of $6. Now, an average obviously will hide some highs and lows, but some of them must be a lot less than $6, which means they don't really have much of an impact on the people who hold those accounts. However poor they may be, $6 is not a great deal of money. Now, to bring in a sort of pair of cliches on this, is there a bit of a danger as we focus on digitalization in putting the cart before the horse?
Thank you, Chris. But before answering your question, I need to tell the audience something which I think is interesting. The governor for the National Bank of Rwanda, obviously we are very close, and like our other East African bankers or central bankers. But the interesting thing is Rwanda always challenges Kenya. That's the big secret. So in a sense, when we do anything, like any new product, it takes them, well, they'll actually unbundle the product. So secretly, they'll grab the product, unbundle it, and then rebuild it much better than we in 6 months. So that's the challenge we have in the room. So thank you, Governor, for coming. Thank you. But now going back to your question, is the issue one of services getting, well, maybe we should backtrack a little. I think there's a danger that we get focused on technologies, right? Where we are excited about a particular set of technologies. And for those that have been around for some time, you remember the time of the transistor, or for that matter, even things about the PC. The PC by itself does not do work. I mean, it has to be, you have to work with it to give solutions and things like that. So I think there is that danger where we just think of new widgets, new apps, new products, but not really thinking about what exactly they're aimed at, meaning is the customer benefiting from that? So my first point here is customer centricity is key. So what does the customer get out of it? Mshwari, for instance, the information you just gave us is the stock in terms of the average stock of savings or in a balance in a particular account. But bear in mind that there are a lot of transactions that are taking place. And I've given many times the example of that fruit seller. Here in Kenya, we call them Mama Mboga. I think that's the same name they use in Rwanda and other places in Eastern Africa. That actually in the morning we mean 3 o'clock in the morning, borrows some money, uses it, this is her operating capital, uses it that very morning, that is by 5 o'clock to buy products, and then delivers it at her place, her corner, stall, and trades during the day, and then eventually at the end of the day repays the amount. The impact on that, on the welfare of that family is huge. So let's not just focus on just the stock, or should we say the average balance. There is the convenience side, and I did also this, it goes into other benefits that maybe the borrower, or in this case, the transactor, could get.
So it's an accelerant to other activities,
Absolutely.
Which drives employment, drives new opportunities, drives entrepreneurial and mercantile behavior.
Sure, sure.
So you're reminding me of the old proverb, ask not the tool the work it can do, but ask the man that's behind it.
That's a good one.
I think it's actually Jamaican. It's a Jamaican proverb.
Jamaican proverb.
I owe it to an old disc by the Gladiators. Stepping back to take a bigger bird's eye view of your responsibilities and what you do, the bank cut the base rate last month. What were the indicators that gave you the confidence that that was the right step at this time?
Okay, so for some time now, a few months, the indicators have been that inflation has really been well anchored, and inflation actually has come down to 4.5%, below the midpoint of our range. Our target range is 2.5 to 7.5%. So we are well below that, or at least we are below that midpoint. So, and looking ahead, the numbers look quite well anchored. Of course, before that, we knew inflation was being pushed up more by food prices and things like that. But also looking at other things in terms of imported inflation through the exchange rate channel and others also that seemed quite muted. So the point then is the MPC saw scope for lowering interest rates. But as they do that, they obviously need to be careful because there is another break in the economy, which is the interest rate caps. And that has kind of thwarted, let's say, confused, let's say, the direction of policy, meaning in terms of trying to be more accommodative, would lowering the signal rate actually lead to sort of accommodative outcome and things like that. So that's really what the MPC was struggling with. But on the whole, there's scope for, as they announced, there's scope for accommodative policy, and they have been they did take that first step.
So further loosening perhaps this year? Oh, well, I can't really ask you that. But,
yeah, I think that's
forward guidance. Let's have some forward guidance.
The forward guidance I think the MPC gave.
Yeah.
So they will monitor what happens because it is important to be sure that the direction is the right one, meaning you do not want to have perverse outcomes. And that's something that obviously we are very concerned about.
Now, the sort of tech angle on credit growth in the economy, obviously that's partly a story to do with the kind of fintech-driven loans, digital, that kind of activity. But another aspect which is important is if credit's to grow responsibly, there probably needs to be a greater attention paid to credit ratings, credit scoring, which of course also is an activity driven or streamlined by technology. What are the steps being taken towards that?
Okay, that's a very insightful question. Frankly, there needs to be, we do have the traditional sort of credit reference bureaus where banks are supposed to let's say, provide or populate with information relating to customers' sort of creditworthiness, how are they performing on their loans and things like that. Standard. That has been around for many years outside the country, but here only recently did we actually, over the last few years, did we actually put this in place. That notwithstanding, of course, banks need to use it well, and that has been a problem, and we are working with them in this area. However, the point is that with the advent of, we call it big data, or at least that's what they call it, the ability to look at more to get more information and make sense out of it, you can see that whole process being much more efficacious or being much more, producing more information. Not just data, but more information about myself as a borrower and my credit risk. And that's really the challenge. So I don't want to call it artificial intelligence and things like that, but those are the terms that are being banded there. But in some sense, it is algorithmic. But I think the point here is that you need to understand, you need to come up with a sort of an outcome about the credit worthiness of each particular borrower.
And do you regulate that type of activity, that type of information gathering and analysis for credit scoring?
There is, I mean, we are regulating that. We are actually the regulator for this. But I think the issue isn't so much regulation. It's more making sure that those algorithms actually make sense. And I think this is where we are, at. I would add that it isn't just, I mean, the outcome needs to change as the data changes.
Yeah.
And when you ask yourself, for instance, why is it that that lady, the one I talked about a moment ago, is repaying, instead of sitting on the, or let's say, instead of waiting until the end of the month, why is she repaying much sooner? Actually, what she's trying to do is to generate a good credit score for her, which will help her borrow more, the next cycle, whatever it is. So I think there are benefits that we need to sort of
it's
begin using.
a pro-cyclical
Absolutely.
credit enhancement decision on the behalf of the fruit-selling lady.
Sure.
Now, that leads on quite neatly, because we talked last year, I remember, about the core concept of trust when it comes to consumer data-driven financial services. And obviously, very uncomfortable times now for Facebook, for example, and the scandal of Cambridge Analytica, and Mr. Zuckerberg is going to have to testify before Congress, and people think he's going to get quite a roasting, and maybe get regulated. So everything that we're seeing about that is throwing these concerns center stage. What's your current thinking on this core question of trust in digital financial services?
Okay. Maybe this question or this set of developments have been long in coming. There'll always be that pressure to get to the customer's information in particular ways, and some of them good, some of them bad. I think you talked about Facebook, you talked about Uber. You could also go back another year, in 2016, I think, when the FBI was trying to get data off the phone of a particular person, somewhere in California, who ended up murdering a few people or something like that.
And Apple had refused to.
Apple refused, and in the end, they found a back door into the phone, and never told anybody how they did that. Anyway, the point I'm making is there'll always be that tension. There'll always be that tension. But the importance of it, in our view, is that the customer, the whole point has to be customer-centric. The customer needs to understand that his information is not going to be used in ways that he has not authorized, or in ways that are, in some sense, detrimental to them. I think all of us understand the sort of force majeure, or should we say, the extreme sort of situations. You want to call it the hot pursuit sort of concerns, right? A child is kidnapped, and they have information on the phone or things like that. I think those sort of considerations we understand. The problem is the regular issues in terms of my location, for instance, or for that matter, my transactions and things like that. And sure enough, my phone, the owner of my phone, or should we say the seller, Apple or Android or Google or whoever, has those data. And so the question for me is I need to feel that they are actually doing things that are not detrimental to my privacy and things like that. This is a balance that we have to, it's a sort of, it's a balance that we have to strike. I think consumers are they need to be protected in particular ways. But I think in all these cases, what is clear is that those actors, Facebook, Uber and others, have gone well beyond what you could call a sort of a defensible sort of line.
So, for example, if it's about lunchtime, and Apple knows that you're walking past a pizza restaurant and it pings you a message saying discounted 20% off pizzas, and you think, oh, that's very nice, but is it very nice?
Okay.
Personally, I find that sort of thing quite disturbing.
No, the pizza bit,
Not that I ever eat pizzas,
okay.
obviously.
My store doesn't do that, Jigunas is my favorite. The Kenyans in the room know where that is. I don't think they have that app. But in any event, I don't know. I mean, this is really what the consumer needs to have a conversation with with Apple or Google or whatever else, whoever else is providing that service. Maybe it's good for me. I mean, for instance, I remember years ago there was, maybe this dates me, there was this app known as what, Groupon, right? And it would tell you that in your neighborhood, a particular store was offering discounts on some dinner or something like that. And I think a lot of us found it very useful. I'm sure there are similar products here in Kenya that do the same. The point for me is it's the consumer that needs to be in the driver's seat. It cannot be the fintech company and so forth. So customer centricity is key. There are two other things, if you don't mind, that I would want to underscore. Customer centricity. One of the the pitfalls of fintech, as I see it, as a regulator, and I don't know what our fellow governors in the room would say, but for me, the issue is the fintech practitioners, let's say the entrepreneurs and all that. They need to embody in themselves and to understand what we, the regulators, what our concerns are. And in a sense, when they bring the products, they need to understand that we do have certain concerns, and those need to be dealt with before the product is launched or before the product is approved and so forth. And that is a key element, for instance, from the perspective of customer centricity. So information, security, and so forth. So I just wanted to flag that at this stage.
Now, Governor, I've got another crunchy question on my list, but let's see if anybody in the audience would like to ask you a question. If you put your hand up, somebody will bring you a microphone, I think. As a gentleman just here in the second row, let me put my specs on. Have you got a microphone? Why not? I'll just shout. It won't be the first time.
Where are you? Sorry, please put your hand up.
Is there a second question somewhere? Please go ahead, sir.
Good morning, thank you. Rafe Mazer with FSD Kenya. In this discussion on data and a consumer-centric approach, a lot of the principles that you've mentioned, like consumers having to opt in to data sharing, are hardwired in some of the modern data privacy laws, like what we see in the European Union or Mexico. We still lack a data privacy law in Kenya. I was wondering if you have thoughts on where that stands or if that's something we should strive for.
Let me answer that. Frankly, my view, I'm kind of contrarian in this, so I don't think I'll disappoint. The problem in my view is that the laws often come after the damage is done. That is the problem, in my view. And we have to think ahead. So in some sense, it goes back to, in the old-fashioned financial world, we would talk about this in the context of market discipline and sort of ethics and things like that, right? Where I, as a banker, embody the concerns of my customer. And sort of in the medical world, you think of the do no harm kind of rule, right? That is the issue. So even as the laws come, the laws will always be one step behind. And I think it is very clear, particularly in the fintech world. So think about M-Pesa, right? M-Pesa, this is a bit different, but it's a good example. When M-Pesa was approved, there was no law that actually supported M-Pesa. The laws, this was approved in 2007, and the laws only came into place in 2013. So in effect, what was happening there was this thing was operating, I don't want to call it outside the law, but actually sort of as a particular exemption by the central bank in a particular area. And you can see now the benefits of that. So if we had to wait to write the law, so I think the same applies to privacy. We need to move ahead, but actually it is the practitioners that need to embody that a lot more. It should be them that have first responsibility. The laws will come. I know they will. But I think the point here is let's not wait for the laws before moving ahead. Now, there are other countries that obviously have been, I don't want to say lucky, but maybe they've come, they're sort of second, they're moving in later, right? And I think they can actually put a lot of the laws in place, having benefited from our mistakes and so forth. By the way, just for the audience, a lot of people in the fintech world have bashed us. Well, maybe not the fintech world, but the practitioners in various ways. The Kenyans started off without interoperability, right? That's what everybody said, and we should have been interoperable from day one. Our answers are generally as follows. First, if you only have one system, by definition, it is interoperable. But more importantly, we had to do it again, given the benefits that we found or that we got from Safaricom, or should we say M-Pesa. I think the benefits are huge. But then we have to clean up. And as you know, today, we have launched the interoperability between the actually 2 and soon 3 systems in Kenya. So that problem will be well taken care of going forward.
But I mean, it was a ground-up system, it was a grassroots system. People started using telephone credit as currency, and everybody else thought, that's a good idea. Why don't we make it easier?
Okay, that's one way of looking at it. I didn't think of it that way. But
That's very positive, because the market created its own solution.
But you see, the point here, what we are doing here is actually, I have to be clear on this. What we are thinking of is person-to-person interoperability. So what we are saying here is that I am part of a particular network, you're a part of another network. And what was happening before, if I had to send you money, what would happen is you'd get a voucher, and you'd have to go to an agent. And get money. And when you want to send it back to somebody in my network, well, you'll have to, the same thing would repeat itself. It was clumsy.
But it was digital currency avant la lettre, It was, it's a fantastic story.
I don't, as an economist, I don't think that's a very fantastic story. No. I mean, then why don't we go back to rocks and cowrie shells and things like that? So.
What's been built on top of it since? We're obviously not an anarcho-economist.
No,
I'm
no,
sure we'll have
not
some of
at
those
all.
on a bit later.
Yeah.
Is there anybody else, perhaps want to squeeze in a final question to the Governor, if anybody else would like to ask one? It's not every day you have this opportunity, ladies and gentlemen. Yes, there's a gentleman. You were just a split second too late, madam. A gentleman just there. Put your hand up again, sir. Yes, you. Oh, sorry, yes. I threw it.
Good morning. My name is Elliot from CGAP. I just want to ask a question around cybersecurity and data protection for customers in the banks, and draw your attention to what happened last year, towards the end of last year, with the credit card fraud that happened in the US. I just wanted to find out from the Kenya banking situation, what the central bank is doing in as far as the data and for customers. Information is out there a lot about cybersecurity and loss of data and hacks that happen within the banks, and little is done in terms of disclosure to the customer that your data has actually been compromised. Just if you could comment in terms of what the central bank is doing to make sure that the customers are aware and what the progress is on that. Thank you.
Okay, briefly on that, I think what we can say is the following. We have had all these experiences, Equifax, as you said, and others around the world, and they're, in some sense, they are cautionary tales for all of us, not just from the perspective of, practitioners in fintech, but every one of us in the financial sector. And I think what it tells us is that you cannot be too careful, right? So in some sense, you have to maintain vigilance, but also maintain a strong, let's say, framework around your data and things like that. We have issued guidelines on this, As a matter of fact, recently, last year, we issued the first guidelines on cybersecurity. I think the first in Africa. I'm sure Rwanda will copy it. And I say it positively. They probably have, actually, for all I know. No, but they're very good in this. And actually, by so doing, they point out our mistakes. So, but actually, more seriously, we have issued those guidelines. We've again also we've been working with them, with the various banks, to understand where exactly they are and so forth. So this is an ongoing process. But I think the point I would just make to close is that you cannot be too careful with these things. And in some sense, you need to be sure it's not only the external, the issue isn't just external, it's also internal, how you take care of data. And there are very basic things there in terms of controls of data. You don't have one person who has access to it all and things like that. They seem to be very basic sort of points, but those are key in terms of moving ahead. So I don't know if I've answered your question, but it's something that it's not just East Africa. It's all of Africa and indeed all of the world. We are all very concerned. I have to be clear that actually when we meet as central bank governors around the world, we compare notes and we learn from each other. So it's something that we all are concerned, and also it's clear that you are strong as the weakest link. So if you think of ourselves as networks of central banks, of networks of financial systems, we are strong as the weakest. And that's why it's important to raise our standards for everybody.
Dr. Njoroge, thank you very, very much indeed, once again, for answering questions in a public and open forum. Great to see you again.
Thank you, Chris.
We have to move on now. Please, round of applause for the Governor.
Thank you, Chris.
Thank you.
Thank you.